Let's talk about modified accrual accounting. And it's a little different. Modified accrual basis is defined as the basis of accounting required for use by government funds in which revenues are recognized in the period in which they become available and measurable, and expenditures are recognized at a time the liabilities incurred except for principal and interest, and those are recorded when due. So here's some modified accrual accounting terms. Fund balance. This is similar to retained earnings or capital. Temporary accounts are closed here. However, the disposition of the fund balances are not exactly under management, voter, or taxpayer control. Rules have to be followed to use the funds. Non-spendable fund balances used in operations, but they're not spent. Restricted fund balances, the last thing that was listed there, is a fund balance that's constrained by a requirement. Committed fund balances are part of a government fund that a government has specified for a particular use. An assigned fund balance is a little bit similar, except it's not really committed. The government just says they're going to go ahead and use it for a particular thing. And unassigned fund balances are just the residual inside the general fund. The expenditure cycle includes several things for under modified accrual basis. First, there has to be budget approval. Then, city departments issue a purchase order for a good or service, and this will be based on that budget. They can't issue the purchase order if the budget wasn't approved. And then goods and services are received, and vendors present invoices for payment. So all these things have to be present in the cycle. And now let's conclude by thinking a little bit about revenue recognition for a modified accrual basis government. So many transactions are not exchange transactions. In many cases, a recipient of funds must have an adequate legal characteristic. School equals school. So if you're not a public school, you can't recognize a grant from the state or anything. Time requirements have to be met if they exist. If the budget requires reimbursement by a government, then the expenditure has to happen first. School. Time requirements have to be met if they exist. So an expenditure of next year is next year's, not this year's. If a budget requires reimbursement, for example, if the state reimburses the local government, then the local government has to spend the money first. And a contingency must be satisfied before revenue can be recognized. Well, good luck. Let me know if you have questions.